Hello traders and welcome to another video review. Today is Monday, the beginning of the new week, but the last day of month of November. So we are going to take a look on the monthly candlesticks today on the various Forex pairs. But before we do that, let's just check the Forex calendar for today to see what is going on the financial markets in the Monday morning. As you can see, we got this economic calendar from the web page of InstaForex broker, and it's getting loaded right now. What are the important data? Let's just swipe down. If there's anything there, yeah, there is something here. So I think that there is some interesting data from I think it's Australia. Company operating profits, inflation gauge, and business confidence. As you can see, they were not that good as expected, and the private sector credit was just like the month before. PMI manufacturing data from China are very, very important. As you can see, they beat the expectations of 51.6 because the released number is 52.1, so it's better than the release, so it's better than the last month, and it's better than the forecast. Very nice. Non-manufacturing PMI is even better. 56.4 beats the previous month reading of 56.2 and the expectations of 56. So what do we have next during this few hours of the Monday trading session? We have a KOF economic barometer from Switzerland. This data are scheduled for release at 10 o'clock. So that's nice. We will see what is going on here. We got some banking data from the UK, but the interesting data are scheduled at 3 o'clock from the Germany, and this data are related to the consumer price index and of course the harmonized consumer price index. As you can see, the market expects a drop from 0.1% to minus 0.7% in the price index. So that's a kind of interesting data. We will see if this data will be beat or not. And then some speech, 3:15 p.m. MPC member Andy Haldane will give a speech. Interesting data from Canada. This is the housing markets, so we can see what is going on in the Canada 3:30, and then another speech from the UK, from the MPC. This time is Silvana Tenreino will give a speech 4:30. During the New York session, we got some data from the of course, America. We got the Chicago Purchasing Managers Index and pending home sales. So that's it. That's everything for today in terms of the data. But because there is a last day of the month of November, there will be some interesting money flows in the market. At least they should be. So I think we should take a look definitely at the Australian dollar. We should take a look at the euro dollar, and I think we should take a look at the US to the Canadian dollar. So this is what are we going to do. So let's start with the Australian dollar. Let's just try with the Australian dollar. This is daily time frame, as you can see, and it's very nice setup for another breakout higher for bulls, because this shooting star candlestick here didn't work that well. It was all, as you can see, retraced. This drop was all retraced. Then we got a breakout, very nice breakout candle, and then of course we are approaching the last swing high at 7,415 pips. We almost hit it because the high was made at 7,408 pips, so there is a 7 pips missing. But the day is not completed yet. It's not finished, so we can still go a little bit higher and let's test the 7,415 level. So that's the daily time frame chart. Let's now take a look at the monthly, because it's the end of the month. So as you can see, I got some lines, but it's not that much important. Anyway, what we are seeing right now on this chart is of course this candle, this monthly candle. As you can see, this uptrend is getting stronger. and right now we are bouncing after the correction. So the target 7,415. It would be good to break above it and close the monthly candle above it, but if not, there is still very big green bullish candle that is showing us the strength of this bull market. So we should go higher next month on the Australian dollar. The euro dollar ahead of the data. So we just start from the monthly candlestick chart. As you can see, we don't need this anymore. So I will just, there you go, release the delete the Fibonacci because it's no longer needed. This is monthly candlestick. So as you can see, again, big candle up, big green candle. This was the beginning of the uptrend correction, and I think we are resuming the uptrend. As you can see, there is still a room for the momentum to go higher. That means, of course, the euro will possibly break above the level of 1.2000, and then the next target, maybe just at the end of this. The next month and of course this year will be somewhere around 1.24,000. So that's nice. That's nice on the euro dollar. Let's just go back on the daily time frame chart, and as you can see, we got this breakout higher again towards the technical resistance. Didn't change much. 1.2013 is the target for today, for bulls, and hopefully for the monthly candlestick close as well. So we are still going up on the euro to the American dollar. And the last chart for today, I think it's again related to the American dollar, is the USD CAD. There are some data, as you know, from the Canadian market, but after this bounce towards 50% of the Fibonacci level, as you can see, we drop again lower, but the last week didn't change much because the market has been trading in a narrow zone just below this technical resistance at 1.3043. So right now, I guess this will be our technical resistance level, so we can change this color to of course red, because that's our code, and this is the other one, and we can change this one to red, so everything is as it should be right now, and there's no problem to see more clarifying picture of this chart. The trend is still down. US dollar is moving lower and lower, even in this mini trend here, this short-term trend here, you can see that if this is the high, this is the lower high, this is the lower high, this is the lower high, lower high, lower high, and we got lower low, lower low, lower low, and this recent lower low. So that's even qualifies for the definition of the short-term downtrend, and it's still going lower. So the next target, 1.2928. This is the next target for the US dollar to Canadian dollar pair. There is still a room on the RSI. As you can see, we are trading at 37 points, so there's like 7-8 points before the level of 30 will be hit. So that's still nice. That's still okay for the bears, of course. So we are waiting for this market to hit the level of 1.2928. Let's take a look at the monthly time frame chart, and as you can see here, this is very bad for bulls, because we got this nice pin bar here, right? Some sort of the bullish engulfing, then the pin bar here with the long down lower shadow, and then we got this down bar here, which closes, as you can see, below the low of this candle from September. So if we get towards 1.2928, it will be very good for the bulls, for the bears to push the price even lower, and the next target might be somewhere around this from this level of January 2018, 1.27, that's 1.2782, somewhere there we might get next month. There's still the room on the RSI, and there is still, of course, ability of this market to go way lower, because we are just approaching the level of 44. So there is still a room to go lower on the USD to the CAD. So the conclusion is that American dollar is losing across the board at the end of the month. So the monthly flows will be, of course, pushing lower this the ongoing trades, and waiting for the month to close. Well, not good for American dollar, losing ground across the board, so no reason for a bounce. Maybe at the beginning of the December there will be a slight bounce, but the general trend across many pairs, and at least at this three that I've just done, is still down on the US dollar. So that's it. This is what we can tell from the technical analysis. And that will be everything for me for today, I guess. Thank you very much for watching this analysis, and I hope I see you tomorrow, the first day of the December, in the morning hours during the London session. Thank you for watching. Take care, guys, and bye bye.